What should I do about retroactive tax code changes? Imagine finding out that a change in the tax law from a previous year could affect your money today. That's what retroactive tax code changes are all about. They are adjustments to tax laws that can apply to past years, sometimes going back several years. These changes might mean you owe more taxes or get a bigger refund than you expected. When tax laws change unexpectedly, especially retroactively, it can throw off your planning. You might have already filed your taxes or made financial decisions based on old rules. Now, you need to understand what these changes mean for you. First, learn what the retroactive change is about. Sometimes, new laws adjust tax rates, deductions, or credits for previous years. These are legal and approved by courts, but they can impact your past filings. Next, stay updated on tax news and IRS announcements. The Internal Revenue Service often releases notices about law changes, including retroactive ones. Following trusted tax sources or talking to a tax professional can help you stay ahead. If a change affects a year you already filed for, you might need to file an amended tax return. This means correcting your previous filing to reflect the new law. For example, if a new deduction is now available for a past year, you can file an amended return to claim it. Filing an amended return involves filling out Form 145, which is the form used to correct previous tax filings. You generally have 3 years from the date you filed your original return or 2 years from the date you paid the tax, whichever is later. Keep in mind, if you owe more taxes because of the change, you should pay as soon as possible to avoid penalties and interest. If you are owed a refund, filing the amended return will help you get that money back. Getting help from a tax professional can make this process easier. They can interpret the law change, help you decide whether to amend your return, and guide you on how to pay any additional taxes owed. They can also help you set up payment plans if you owe a lot and cannot pay it all at once. Because retroactive changes can affect your future planning, stay flexible. For example, if you are considering a home sale or retirement contribution, know that tax rules might shift after the fact. This could change your expected tax benefits or liabilities. Also, check if you qualify for any specific tax credits or deductions that might be affected by the retroactive change. For Black families, some credits like the child tax credit or earned income tax credit can make a big difference. Make sure you claim all the benefits you are eligible for, especially if the law change impacts your eligibility or the amount you can receive. Finally, consider engaging with community organizations or advocacy groups that focus on fair tax policies. They can provide support and help you understand how these changes might affect your community. In summary, when faced with retroactive tax code changes, stay informed, review your past returns, seek professional advice, and act quickly. Being proactive can help you avoid surprises and make sure your finances stay on track. For Black families, understanding these changes and planning ahead can help protect your financial stability and maximize your tax benefits.